Hello, we are BBC Capital. Our team is made up of five members: Agat Betimoti, Amanda Maritza, Nadia Atsila Zafira, Muhammad Afnan Fawaz, and Chandra Wijaya. We each focus on different sectors to find the best opportunities. This includes finance, technology, energy, and both basic industrial and cyclical markets. And this is the executive summary and investment objective. Between October and November 2025, BBC Capital achieved approximately 88% gross return, which is much higher than the market average. Our main goal is long-term growth. We want to grow our capital by beating the Indonesian stock market index and other global benchmarks. We don't just follow the market. Instead, we look for asymmetric opportunities. This means we find trades where the potential reward is much higher than the risk. This is the investment strategy framework. To achieve this goal, we use three core strategy pillars. First is high beta tactical exposure. We trade mining and commodity stock when prices are rising during market upcycles. Second one is deep value dislocation capture. We look for cheap stock that are priced below their true value. The third one is event-driven alpha generation. We participate in big company events like merger, acquisition, and or restructuring. Finally, we always use risk and execution discipline. We manage our cash carefully and sell position quickly to protect our capital and keep it ready for the next big opportunity.
Okay, so we move to the first week, which we have a top-down approach. And based on our top-down approach, we have findings of supportive monetary policy by Bank Indonesia. Bank Indonesia decided to maintain the benchmark interest rate for 4.75%, and this decision was made in line with inflation forecast that remain within the target range of 2.5 until 1%, and the need to maintain the stability of rupiah exchange rate amid global uncertainty while supporting the momentum of domestic economic growth. And this impact on liquidity and risk appetite with a relative low and stable interest rate, funding costs for corporation and consumer have become more affordable and encouraging wider credit distribution and money circulation. So, these loose monetary conditions often reduce the attractiveness of fixed income asset and increase allocation to risky assets such as stocks, and investor is seeking the high returns. Also, the consequence of the monetary policy by Bank Indonesia is sector rotation and blue chip preferences. Interest rate stability and strong liquidity help to contain excessive volatility in the Indonesian capital market and provide psychological support to market participants. Under these conditions, institutional and foreign investors generally tend to reallocate the fund to large cap and liquid stocks, and it's often described as blue chip stocks. So, based on our top-down approach, these are sector selection for our investment. The first is energy and commodities, financial, telecommunication, consumer staple or non-cyclical, and industrial and building material. But it is selective because it is focused on issuer with strong fundamental and healthy balance sheets. Next. Next is the screening strategies for the week. For the first week, we have three stock. It is SIM, Antam, and also Wi-Fi in the next slide. And SIM or Salim Infomas Pratama is chosen because the undervalued NAV, downstream integration with Indofood, a structural tailwind from biofuel policy, and attractive valuation with rating potential. And also for Aneka Tambang or Antam, the reason is because the global gold price increase, liquidity expansion, and banking policy Himbara. Next is Sulawesi Sinergi Digital or Wi-Fi. It is chosen because of undervalued with massive upside, strong B2C growth with Starlight, structural tailwind from digitalization and 5G, efficient capex model with partnership, and attractive valuation with re-rating potential. Based on our portfolio or stock selection, we conduct a portfolio diversification to minimize the risks. And for the biggest portion is for Antam, which is 37.1, and it is represent our monetary liquidity and safe haven demand thesis. As the money supply in Indonesia grows continuously, the environment to inflation of asset prices is preserved. Gold has served well historically within this kind of environment, and Antam being the large producer of gold and provides leverage exposure of this movement. The second is Wi-Fi, with the portion of 30%, 30.4%. And Wi-Fi is our belief in Indonesia's story of digital infrastructure development. The rollout of fiber optic networks of the company attracts structural demand of the faster and more stable connectivity throughout the archipelago. And also with the strategic investment made by Hashim Group, uh, we feel that Wi-Fi can scale faster and reach the scale. And the third is Salim Infomas Pratama or SIM for 25.9%. And SIM is our position based on valuation. It is Hugh Holdings of Plantation and Land Bank from net asset value or NAV, which is not reflected in the current equity price. SIM trades at a depressed price to book or PBV ratio, giving us a deep value exposure to the palm oil and agribusiness industry. And we think that the NAV, our current valuation cap over margin of safety with a asymmetric upside. And also, we still have cash for about 6.6%. And this is a tactical freedom to move decisively to attractive opportunities that are available in the near term.
In week 3, our main focus was on gold-related stocks, especially Antam and Harta, because global gold prices were very volatile and moving strongly upward. We initially bought Antam because it benefits directly from rising gold prices. During this week, gold prices increased sharply due to global uncertainty and strong demand for safe haven assets. As you can see on the price chart, Antam had already moved up significantly and started to show signs of price exhaustion. Our target was short-term profit, not long-term holding. So on October 15, we decided to sell Antam. This was not because the company fundamentals become weak, but because the price had already reached our return target. Selling at this point allowed us to lock in profits and avoid the risk of sudden price reversals. Next is Harta, which is also closely linked to gold prices. We chose Harta because it has high short-term momentum and reacts quickly to changes in gold prices. We accumulated Harta at lower price early in the week when momentum was started to build. As prices increase, we gradually sold the positions to take profits. This strategy helps us to benefit from short-term price movements while limiting downside risk. Harta was treated as a tactical trade, not a long-term investment. This slide explains our decisions for Wi-Fi and SIM, where our focus was mainly on risk management. We bought Wi-Fi earlier because of its strong growth story in digital infrastructure and positive earnings results. After the Q2 earnings announcement, the stock's price jumped sharply as shown in the news and image on the slide. However, after such a fast price increase, the stocks become more volatile, and at this point, the risk of a short-term pullback was higher. So in week 3, we decided to close the Wi-Fi position. This was not because the company is bad, but because we wanted to secure gains and reduce short-term risk. And for SIM, the situation was different. Although SIM is fundamentally undervalued and defensive, during this week it shows weak short-term momentum. As seen on the price data, SIM experienced quick price reversals, meaning the price went up and down without a clear direction. Because of our strategy in week 3, focus on efficient capital use, we decided to exit SIM early. This allowed us to move our capital into opportunities with stronger momentum and higher conviction. This slide shows the overall results of our rebalancing decisions in week 3. On the left, the bar chart compares the portfolio value at the start and the end of the week. At the start of week 3, the portfolio values was around 4.86 million, and by the end of the week, it increases to approximately 6.36 million. This improvement shows that our active buy and sell decisions work well, especially in capturing short-term momentum and managing risk. On the other side, the summary highlights our key strategy. We focus on timing, we took profits when target were reached, and we avoid holding position when risk increase. And overall, rebalancing week 3 demonstrate that BBC Capital does not simply hold stocks positively. Instead, we actively manage position, rotate capital, and prioritizing risk adjustment returns, which help the portfolio remains flexible, profitable, and under changing market conditions.
Okay, now next I will explain how we are rebalancing our portfolio for week 4. So, actually in this week, the IHSG is currently up to 4.5%. Unfortunately, although this sounds like a good news, the increase of the IHSG only based on the banking sectors, such as several large banks. But other sectors has not shown any significant movement. And in addition, the current situation is that US yield have spiked to 4.1%, and there has been a sharp increase in the gold price here. Although this also sounds great, in reality, Antam has continued to decline the price this week, that indicating the Antam is actually overbought condition. To escape this euphoria, we are doing some research and following the advice from the investing.com here, and we are actually targeting our stop loss at around 300 at 3,190, and at the end we actually successfully sold our Antam at 3,180, which quite good, because in fact even though we are doing some not maximum profit, the Antam price actually continue to decline since then and touch below 3,000. And uh in order to fill up this Antam, we try to find other opportunities, like since Antam is removed from the portfolio, and we find two interesting stocks based on the sentiment news and the financial statement. Here in the Bumi, we actually found that coal price actually continued to rise this week, and accompanied by the news that Bumi will begin salt gold production in 2026. And also even better, that Bumi says that he done a large of acquisition of Wolfram Limited up to 99.68%. This news is very positive, and this actually good even for both short or long term. Because of this, we doing a accumulation of Bumi around price like at the price around 132 until 135. And the other stocks we found interesting is uh, on this EMPC. So in this EMPC shares, we actually see the financial statement of EMPC actually have a profit growth up to 15% in their 9-month report. This actually good news, and we doing a re-entry of the EMPC at the price of 2,720. That's all the balancing condition. We are doing a consolidation strategy by getting rid of some bad stocks and try to find other stocks that maybe have more quality to do the trading.
Now we move to the week 5. And during the week 5, the portfolio strategy blended long-term value holding and short-term momentum. As we know, and in week 5, we still hold Impact Pratama Industri or IMPC, and also excessive buying on Bumi Resources TBK and buy on Dharma Henwa or Dewa. So for EMPC itself, it's fundamental hold investment that EMPC serves as the fundamental anchor that provides value stability by mitigating the risks of sudden declines while offering sustainable growth prospect for the portfolio. This decision is maintain the position of Impact Pratama Industry based on the company fundamental strength in resilience to macro fluctuation. As we know, for the financial highlights, on third quarter of 2025, financial report shows that the net profit growth is around 15% year on year, supported by stable EBITDA margins and healthy cash flow. These factors reinforce EMPH's position as a defensive asset in the portfolio, especially when the market is volatile due to commodity price changes. The second is because of the coal sector momentum. We found that China coal price rarely reaches a 12-month peak at 116 USD per ton. And for this, we choose Bumi and Dewa or Dharma Henwa is because Bumi reacted to increase in the coal prices while Dewa its response was slower through increased mining service activities. So as we know, Bumi and Dewa are both part of the coal ecosystem, but they have a different business characteristic and sensitiveness to coal price increases. Based on the graph besides, we can see that on the week 5, which is for from 27 October to 2nd November, there is a excessive increasement in coal prices, which is affecting Bumi so much because Bumi performance is highly sensitive to coal prices movement. Coal price increases generally have a rapid impact on Bumi sentiment and share price, although this does not always align with short-term fundamental improvement, making it a high beta and momentum-driven stock. But Dewa is a mining services provider whose performance is indirectly affected by coal prices increases, and or we call it second order effect through increased production activity and demand for services from mining companies. So as a result, Dewa stock response to coal price increases tends to be slower, but potentially more sustainable, especially when accompanied by the new contracts or more volume expansion with the market behavior that is relatively more based on earning expectation and margin improvement rather than simply commodity price sentiment. So the inclusion of Dewa is in portfolio also provide risk balance as this stock is moves more slowly and consistently, thereby mitigating volatility originating from Bumi or commodity sentiment.
Right now, we are talking about our week 6 rebalancing on our portfolio. We're jumping into which is Bumi and also Dewa. I want to tell a story, a little bit story of how we beat market this month, like the past month, because it wasn't luck. And it was about we see something different, like when the rest of the market ignored this. Well, exactly. This is a story about Salim Group who acquired Bakri. Yeah, for a long time, as you know, people were scared of Bumi or even Bakri's group, right? They said it's too risky, too much debt. But we saw something different, one massive green light. When Anthony Salim bought 46% of the company. Just think about it. The Salim Group put 24 trillion rupiah into this company, into this group, into these conglomerations. Yeah, of course, Salim don't spend that kind of money to gamble, right? He do it to take control and fix the business from inside, just like Bill Ackman's do in Pershing Square and also Warren Buffett in yeah, Berkshire Hathaway. But here's the real secret. It's very, very simple. Boomin sits on 200 trillion in assets, right, in market cap. For a company this big to be healthy, it needs to make at least 10% return on those assets. That means they need to generate 20 trillion rupiah in profit every year. But here's the problem. They can't make that much amount of money from coal forever. Their main business, right? Coal. The world is changing, so Salim made a new rule. By 2031, he wants Bumi, 50% of its revenue must come from non-core sources. This forced them to buy valuable new assets, like the Wolfram deal you see here. Like he buy giant that is forced to evolve into a gold and mineral powerhouse to hit that 10% target that is a massive opportunity. But it's not stopped here in Wolfram only. They still have like more about to acquire a massive company out there besides this Wolfram limited companies. Then we have Dewa. Why Dewa? If Bumi is the giant ship, Dewa is a speedboat. We saw three things here that made this no-brainer, I say. First one, the trust factor. Dewa got 1 trillion loan from BCA, and we all know BCA is the strictest bank in Indonesia. If BCA trusts Dewa with that much cash, it's almost 1 trillion rupiah. The bankruptcy risk is basically zero. And then the second one, they stop renting, they start owning. They got an investment from XCMG deal. Before they warrant machines and paid huge fee to other people like UNTR and PAMA. Now they own the machine from XCMG. And when you stop paying rent, the money goes straight to your profit, right? They can minimize the operating expenses. That's why I see Dewa is very, very interesting. And then they got free lunch from their Bumi, from their holdings company. Bumi give Dewa a huge assets, a huge gold assets. We can say that Gayo Mineral in Aceh. Basically, it's for free for Dewa to maintain it and their contractor. Bumi give Dewa for free this gold mine. And it's 34,000 hectare. It's yeah, we can say it's as big as PTRC, if we know one of the biggest gold mines in Indonesia also. That's why we see that valuation of Dewa at least doubles of Archie because they will have a contractor business and also have a gold mine that as big as Archie. That's why you can see that they will have a valuations of 40 trillion market cap. That's why we put more money in Dewa. So yeah, that's the thesis. We bet on Salim fixing the math at Bumi and also Dewa, and we bet also on making more profit. And that is how we get our alpha last month. Now,
Moving into our specific trades for week 7, we focus on high volatility stock to capture quick profits. First, let's look at Bumi. We use Bumi as our main tool to follow the positive momentum in the coal sector. We bought Bumi at 134 Indonesian rupiah and sold it in several parts when the price reached between 193 Indonesian rupiah and 195 Indonesian rupiah. This strategy was highly successful, giving us realized gains of 30% to 31% for each trade before the market sentiment started to change. Second, we trade Dewa as a short-term vehicle to take advantage of price gaps. We entered between 410 and 442 Indonesian rupiah while we capture a quick 10% upset on some trades. We remain very disciplined. When the price pulled back, we exit with small loss between 4.78% and 5.26% to make sure we didn't get stuck in a falling trend. Next, we look at how we manage our risk during the week, especially when news broke about the government considering higher royalties for coal miners. For Adro, we initially saw small gains of about 1.02%. However, as sector pressure increased, we chose a defensive exit at -3.17%. Our priority here was capital preservation, keeping our money safe during uncertain times. We took a similar decisive action with Adaro Minerals. Once we saw a downside confirmation, we exit at -5.22%. By cutting this loss early, we saved our capital so we could use it for better opportunities later. On this side, we had what we call peripheral alpha. Stock like Impact and Catros then gave us small but steady gains of 1.09% and 0.45%. This stock helped grow the portfolio slightly without adding too much risk. Finally, let's look at the total result of this action for the week. We start week 7 with a portfolio value of approximately 6,400,000 Indonesian rupiah, 400,000 Indonesian rupiah. By the end of the week, through active trading and strict risk control, our value grew to approximately 7,900,000 Indonesian rupiah. This resulted in a very strong absolute return of 19.70% in just 1 week. The key takeaway from week 7 is that active capital rotation works. By taking big profits on winners like Bumi and quickly exiting losing trades like Adro and ADMR, we are able to deliver high returns even in volatile market.
On this slide, I will explain how BBC Capital managed its portfolio allocation and rotation over time. The table on the left shows our allocation between equities and cash across 5 different phases. In the early stage, which was late September, we kept equity exposure very high at around 95% because the market environment was supportive and we wanted to capture upside momentum. As we moved into the early and mid October, we began to reduce equity exposure and increase cash. This was conscious profit-taking decisions after strong price increases, especially in commodity and high beta stocks. We wanted to lock in gains and reduce short-term risk. In late October, we became more aggressive again. Equity exposure increased to 85%, reflecting our confidence in selective opportunity, particularly in energy and commodity-related names. Entering November and December, the strategy became more defensive. Equity exposure gradually declined to 70% and then 60%. While cash increases, this was done to protect capital management volatility and secure profits as market uncertainty increased. On the right side, the pie chart shows the compositions of our equity holdings. The largest allocation was Bumi and Dewa, which reflects our convictions in community-driven opportunities during that period. Smaller positions such as Antam, SIM, INPC, and PBSA were used for tactical exposure rather than long-term holdings. Overall, on this slide shows that BBC Capital did not follow fixed allocation. Instead, we actively adjusted exposure based on market conditions, momentum, and risk consideration. This slide focuses on performance, both on a weekly basis and cumulative over time. The bar chart on the left shows weekly returns. We can see that the returns were not smooth. Some weeks produced very strong gains, while other weeks showed small losses or flat performances. The pattern is expected in active strategy that focus on momentum, tactical entries, and disciplined exits. Importantly, negative weeks were generally controlled, did not erase the gains from strong positive weeks. This reflects our focus in risk management and time profit taking. On the line chart on the right compares BBC Capital's cumulative returns against major benchmarks such as JKSE, Nasdaq, S&P 500, and Hang Seng. While the benchmark moved gradually and sometimes sideways, BBC Capital's cumulative return shows much steeper upward trend. This means that although our weekly returns were volatile, the strategy was effective in converting short-term volatility into long-term gains. Active allocation, sectors rotation, and disciplines exits allows the portfolio to outperform broader market indicators. In summary, this slide shows that BBC Capital performance was not driven by simply following the market, but active decision-making and timing and capital efficiency.
Okay, next we will discuss about the performance measures of BBC Capital. Here, we are using 3 indices as a benchmark to cover local and regional aspect. There are IHSG, LQ45, and Nikkei. And first, in the week cumulative return table, we can see that BBC Capital actually have more higher weekly average than the other indices. And the weekly average of BBC Capital is actually like 5 times more better than the other indices, which mean like we have actually earns more money than the other indices. But however, to measure the actual performance, BBC Capital actually shows the performance in the performance metrics. And most dominant of them, BBC Capital shows that we are actually better and beat the others indices. For example, even though we have more higher risk or standard deviation here, the score of the Sharpe ratio shows us that we have actually utilized risk 30 times more efficient than the others. And the score of the trainer ratio shows that we are doing the defensive growth by decoupling from systematic market risk. It's relevant, as you can see, at the week 3 and week 7, even the market actually kind of crash, we do a much better return than the others. And the Jensen Alpha actually shows that we are doing a consistently outperforming the other benchmark.
Now we are in a study case. Question is, the investor wants to buy 10,000 lot of our fund. So we have to calculate the NAV or the net asset value. So yeah, we can look at the table. Because of our big win, the value of one unit has grown from our initial capital, 1,000, into 1,877. This is today's price. So the calculation is very simple. The investors want 10,000 lot, right? 10,000 units. We multiply that by the current price of 1,877.592, our current value, the brand new capital. That means he needs to transfer us around 18,775,000 rupiah to the fund. When he does that, look at what happens to the ownership. The new investors instantly own 66% of fund because he put in fresh money. The founding partners now own a smaller percentage, about 6.6% each. But don't worry, the percentage is smaller, but the money is safe. The founders still have their profit, and the new guy starts at the current market price. This way, we can grow the fund to 28,163,000 rupiah without hurting the people who started. And so it's fair for everyone. So yeah, that's our calculations for the study case.